Hey guys, this is Jeff, Swing Trade Warrior with warriortrading.com, back with the Friday's weekly swing trade recap video here. A couple trades I want to talk about we closed out this week with, or that we closed out during the week. We had great success on three names in particular. We'll start with TCK. Tech Resources. This thing has been in a monster uptrend all year long. It came to my attention after hitting a scanner on a pullback here back on looks like October 5th is when we got in this trade. So hit the scanner on the 4th here after breaching the 20 moving average. The next day we promptly see a bout of buying and a high relative volume spike here as price action maintains or holds that 20 moving average. The next couple days there was a lot of market weakness, and we did see a little bit of selling pressure here under the 20 moving average, but the good news is this thing held up for us. This is ultimately what we want to see, these key levels being respected. The next obvious area of support here is this white line, which is the 50 moving average. Didn't seem to matter though. We never tapped that area. Once the market strength came back into the market, this thing did shoot right up off of this area of support here, and we exited with about 25% return on our investment there. This was an option spread that we used. We got out on this candle just before it hit resistance here at $19. You can see since then it's been flagging out under this area at $19, and we'll put this one on our watch list for next week over $19. As that seems to be a pretty key area, a pretty big pivot. So if we break out over the 19 area, if the SPY holds up, I think this thing moves higher. But we'll see what happens next week. So locked up 25% on this nice pullback trade. Very slow moving trade. We were in that one for total of 3 days, and we had very little exposure. We'll take a look at let's see here, XLE. This is the energy sector ETF, and we have a awesome pivot off of, let's see here, let me draw a line, sorry. Awesome pivot here off of the 72 spot a couple different times. So missed this entry back here when it hit 72. Wasn't really on my radar. This thing sold off all the way down to 66, gets bought up here on the 200 moving average, recovers, and we see a nice trend higher to that same 72 spot again. Once it tapped that area, it started selling off, and we're looking for to capitalize on the move up here towards 72. So we got short using puts on XLE back on October 5th. Let's see if I can find that. That was our entry right here. Turned out to be a little bit premature. This thing did try and climb higher. Did not break the $72 mark. We held it, and this thing was up about 15%, down 15%. Never really got to my 30% target, and we ended up bailing on this trade about flat, up 2%. I got out on this trade the other day and didn't end up really making any money, but we didn't lose any money. This thing really is having trouble breaking down under the 20 moving average support here, so this thing really isn't of any interest again until it gets under the 69.60 area, which is the next significant area in effect here. You can see this area of previous resistance from back in June and then July became support. I always say previous resistance becomes future support, and you can see it acting as support all through August, and then now once again it's acting as support. So got out of the way of this one, didn't take a loss on it, wasn't a winner, but we moved on to other bigger, better things. One of those was an SPY trade. SPY, we bought some calls on this. I'm trying to see the date here. We got long the SPY on the 6th. August 6th. Okay. August 6th here, we were looking for a little consolidation and a breakout over the 216 area on this particular SPY trade. We used the 215 calls. Okay, they were moving. So these were right at the money at the time, and they were going to stand to have the best risk-reward ratio. This thing struggled over a few days to pop up here, but finally on the third day, we got this little tiny spike over 216. You can see right here. We were able to sell on that move. It wasn't our 30% target, but we did take profits at 23%. Nobody should scoff at 23%. It's nothing to be ashamed of. That's a great trade. We didn't have to hold it through any large downturns or anything, so that was a good one. Another 3-day winner for us. And also during that time frame, we had one other trade, AGN. Allergan here. Let's see, we got this, we used a call spread on this one. We got long on AGN back on the 7th, which is right here. All right, so you can see this thing, we get some lines going here. You can see this thing climbing higher. This is our pivot line here, right around the 238, 239 area. We used a 240 by 245 bull call spread here, and you can see once we broke out over the 239 pivot, we were in a nice position, captured profits while this thing shot up to about 245 or so. We sold on the spike. We did lock up a nice 28% on the move, and this was a 2-day trade for us. So we got these profits overnight. May have left a little bit on the table here, but as you can see, we took our profits. My profit target on every options trade is 30 to 50%. This is no exception. So we definitely want to see consistency here with our trade results, and that 30% seems to be, as far as the way my trading strategies, my metrics, and my styles, and my risk tolerance goes, it seems to be my sweet spot and has been for some time. If I hold for 60% moves, I don't get them as often, and if I hold for only 10% moves, I might get them more often, but I'm leaving a lot of money on the table. It's one of those things that we teach in the courses that you guys have to understand as traders. You have to evaluate where your sweet spot is for return, so that you're not leaving too much money on the table, but at the same time you're not overexposing yourself to unnecessary risk. This is a good one. Locked up profit the next day. If I'd have gotten greedy and held thinking, oh, this is going to break out here, it's got higher or it's got more room, we would have sold off over the next few days nearly 20 points. So I would have turned my 28% winner into a surefire loser. Obviously we didn't have that issue. That is something to consider, okay? So I do get asked that a lot, why 30% is always my profit target, 30 to 50, and that's because I have the highest probability of success with that return on my investment. So like I said, if I pushed it to 45, or cut it short at 15, my numbers aren't as great come the end of the year. So everything is done for a reason. Understanding your numbers is critical. If you guys have any questions about that, you want some help determining what might work for you, all our members get free access to our trade blotter, so you can track your metrics. I encourage everybody to do that, so you understand where you're finding success, where you're struggling, what to avoid, and what to double down on. Numbers are an important part of not only trading, but understanding your own numbers as well, because they do have a direct correlation to your success as a trader. If you guys have any questions, feel free to email me, jeff@warriortrading.com. Other than that, I'll see you guys next week with another trade recap, or weekly trade recap. Thanks. Have a good weekend.